Okay, so let's talk about a massive economic shift that's happening, right under our noses. It's being driven by two of the biggest forces in tech today, AI and crypto. But here's the thing, they aren't just running on parallel tracks anymore. They're on a collision course. And where they meet, well, that's the foundation for the next financial revolution.
To really wrap your head around the sheer scale of what's coming, you only need to know one number: $33 trillion.
33 trillion. I mean, it's not just a big number, it's a historic one. That's the projection for how much value is going to move through stablecoins, digital dollars on the blockchain in a single year. And to put that into perspective, that's double the entire amount processed by a giant like Visa. This isn't a ripple, it's a tsunami of value, and it's moving in a completely new way.
So, the big question is, where is all this money coming from and where is it even going? Let's unpack the story behind this absolutely staggering $33 trillion figure.
But here's the kicker. Despite how huge this is, it's a story that almost nobody is talking about. It's all happening just beneath the surface. Which means, if you're hearing this right now, you're getting a peek into a future that, honestly, 99% of investors haven't even started to think about.
So why is this revolution even necessary? Well, it all comes down to one core issue. And it's not a bug, it's more like a fundamental clash between the future of technology and the past of finance. You could call it AI's banking problem.
I mean, really think about it for a second. We're building AI to manage our supply chains, to execute complex trades, to run entire companies. But that same brilliant AI, it smacks right into a brick wall with our old school financial system. It can't open a bank account because it's not, a person. It can't pass know your customer checks. It can't legally sign a contract. So the very tool that we expect to run the future of our economy is literally locked out of it. This leads us to a massive, just unavoidable question. If these AI agents are going to be managing trillions of dollars in economic activity, but they can't even use our current banking system, then how in the world are they going to move value around? How will they actually transact?
And the answer to that question is where it all just clicks into place. See, the solution isn't trying to jam AI into the old, clunky system. It's about building a brand new system for it. The solution is what we call the crypto rail.
So AI agents won't need a bank account. Nope. They'll have a crypto wallet. They're going to transact using stablecoins on global blockchains that are always on, 24/7, instantly anywhere on the planet. This is a system with no banks to ask for permission, no borders to slow things down, and it requires zero human meddling. It is, quite literally, a financial system built for machines.
And look, this isn't some far-off sci-fi fantasy. Jeremy Allaire, who's the CEO of Circle, the company behind the huge USDC stablecoin, he predicts that billions of AI agents are going to be transacting on blockchains in the next 3 to 5 years. That's not some distant future, that's practically right around the corner. Okay, but we can move beyond just theories and predictions and look at some cold, hard proof. This new financial infrastructure isn't just being planned out. It's live. It's operating right now. Take Coinbase, for example. Just last year, they launched a protocol called X402, and its whole purpose is to let AI agents pay each other for services using stablecoins. And it works exactly like the theory says it should, automatically, instantly, and with absolutely zero humans involved. So was there any demand for a system like this? Well, the proof is in the numbers. In its very first month, the transaction volume on this new AI protocol grew by a staggering 10,000%. That's not just adoption, that's an explosion. It proves there was this massive, pent-up need for this exact solution. And it's not just the crypto-native companies that see this coming. Oh no, Wall Street is waking up, big time. When Larry Fink, the CEO of BlackRock, the world's largest asset manager, says that the future of markets is tokenizing every stock and bond, you should probably listen. A fundamental shift is underway. And BlackRock isn't just talking, they're putting their money where their mouth is. Their own tokenized fund, which is just a fancy way of saying they're putting real-world financial assets onto the blockchain, it absolutely skyrocketed from $40 million to nearly $1.8 billion in just 18 months. This is what institutional money pouring onto these new rails looks like. So what happens when you combine these autonomous AI agents with a new financial system that's literally built for them? You get something entirely new. You get the dawn of the autonomous economy. And the projections for the size of this new economy are almost hard to process.
You've got McKinsey forecasting a $4 trillion market for these tokenized assets. JP Morgan puts the number at 13 trillion. And then, looking a bit further out, TD Cowen projects a mind-boggling $100 trillion market. That's like 10% of global GDP, tokenized and living on chain. It's insane. So what does this actually look like in real life? Well, picture this. AI agents trading tokenized Apple stock at 3 in the morning, your investment portfolio intelligently rebalancing itself while you're asleep based on real-time global data. A bot that you own is earning revenue from users in Nairobi, London, and Tokyo, and it's getting paid instantly in stablecoins. We're talking about a world of markets that never, ever close.
Now, before we get too carried away, we have to be really honest here. The scale of this opportunity is matched only by the scale of the risk. This new world is definitely not a utopia. It comes with massive, complex dangers that we are only just beginning to grapple with. And the downside is very, very real. Just last year, $3.4 billion were stolen in crypto hacks. We know that AIs can hallucinate or just make stuff up on complex tasks up to 30% of the time. Now imagine that happening with $1 billion fund. We already see hundreds of millions being extracted every year by predatory bots that game the system. And now even the IMF is warning about a new kind of algorithmic systemic risk that could destabilize global finance. So yeah, the upside is massive, but so is the downside. All right, so after weighing this huge opportunity against some very serious risks, how should we think about all this? Let's just boil it all down to a simple framework before we get to the final question.
Here's probably the simplest way to understand this entire shift. Step 1. Think of AI as the brain, the decision-making layer. Step 2, think of crypto as the circulatory system, the value transfer layer. And step 3, when you combine them, you unlock the ability to create fully autonomous economies, brains and blood together.
And if you're trying to grasp just how big this is, the best analogy is the internet itself. Think about how the internet in the early 2000s completely rewired how we think about information and communication. Well, this convergence of AI and crypto is poised to do the exact same thing, but for the very ideas of finance, ownership, and even work itself. Look, the bottom line is this. The new financial infrastructure is being built as we speak. Institutional money is already moving onto these new rails. AI agents are already starting to transact. This shift, it's happening, with or without us. Which really just leaves one final crucial question. Do you have a plan for what comes next?